Hey traders, this is Ron Heed at Market Tamer. Happy hump day, hope you're doing great. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. Kick off here with the Dow ETF, the diamonds up $2 to 0.82%. Remember yesterday I said we had this big up day, and we were still on this downtrending channel, and we were still below the red line, which is the 20-day EMA. So much for that. So while we were in this downtrending channel, the bears had a big edge. With us now breaking the channel and closing above the 20-day EMA in red, the bears still have an edge, but not as much as they held yesterday. We're starting to see a trend change now. Could this just be a dead bounce, or maybe we rally up into the orange line, which is the 50-day institutional moving average, and then we roll over and go right back down? We could, but the winds are starting to turn a little bit. We're not as decisively bearish as we just, frankly, were yesterday. So right now, still bearish overall, but we're getting a bit of a bounce here. Bears, just keep an eye on that 50-day. Take a look at the spiders. Up 0.83%. Let's zoom in even closer. We also closed above the 20-day EMA, target 50-day. Bears here too, losing a little bit of their edge. Take a look at the Qs. Closing almost at the highs of the day, still well below the red line. Now, this is the underperformance here is due to Facebook, Google, Apple, Amazon all having DOJ, FTC investigations reportedly ongoing or just starting. If we get above the 50-day, if we get above the 20-day in red, just like the other indexes, we would go 50-day in orange. Overall, bears still have the edge. They're just not as confident on the charts as they were yesterday. Make sense? So caution's still warranted here. Facebook. After face planting 2 days in a row, we get a little bit of a bounce right at that 200-day moving average around 160. Ties in with this previous support level. I still want alerts at 160 if I was following Facebook, because if we close below there, gap fill and then back down to the December lows. Despite these 2 little days of bouncing, up here are the targets, 180. I mean, it has to get above the 50-day, above the 20-day for these charts to even remotely start to look a little more bullish. Google. Lost almost 1% today. Still another inside day. Bears still have the edge. This is now turning into a bear flag. Apple. Everybody seems to have an opinion on Apple. It's just so funny. Again, I would say trade what you see, not what you think. That's how I like to approach the markets. We ran right up into the 20-day. We could not really get above it, closed below it. Apple needs to regain all 3 moving averages here before it could be considered technically bullish. Amazon. Up about 0.5%. Stop cold at the 200-day. That's an interesting spot to stop. So if it can get above the 200-day, we come back down here towards 1600. If it does get above the 200-day, then we just go to each of these moving averages. CLR is a stock we looked at last night. I just want to show you, after such massive volume and a big move, today we gave back 4%, a chunk of that. So the question is, if I was trading this, what would I look for a potential stop? If we would close below the intraday lows, that would be the stop out. A lot of times I like to use the 20-day EMA as sort of a litmus test, a rising trailing stop on bullish trade ideas. But given we only finished a little bit above it on yesterday, and now there wasn't much wiggle room. There's no give back area. We went from 35 to 40. That's a huge move, right? So if we get below the intraday low on a closing basis, that's where I might consider a stop out as an educational example, as always. How about Zillow? Remember, I talked to you guys about this stock a while ago. We get above the 200-day, and since then it's 39 to 46, almost in a straight line. Volume's starting to come in. Zillow's upside target, now we've taken out this little spike high, and that occurred today, would be up around 51, 52. That's still maybe 15% higher, and then a gap fill to 57. Very interesting here. I would also consider a 20-day EMA in red as a potential trailing stop. And how about seasonal trade ideas? The market was falling apart here as May began. Look what Under Armour did. It did come down right into the 200-day, bounced, pulled back just a little bit, and now it's just jumping 3 straight days in a row. My point here is, despite the market pulling back, Under Armour was actually flat, held up quite well. How about Pod? This was another one we talked about. Earnings, magically it goes higher. I told you guys not to be shocked by that, right? And look what happened. Market dropping in May, Pod just keeps on climbing. The down days were pathetic. There was nothing to them. The volume was light, showing again how the big money is pouring in. Even when the market is rolling over, it's amazing how some of these seasonal trade ideas, you just say, wow, this one just keeps going up. even when the market's falling apart. But you weren't shocked by that because you knew the seasonality effect is so powerful in the markets. And how about another one? CERN, which is Cerner. Again, magically in a positive earnings report. Again, we wouldn't be shocked because we knew it was in a seasonal window. And look what happens. As May begins, it just keeps pushing higher. Its down days were puny in compared to the overall market and other stocks. And here this one sits at new highs too. Again, seasonality just rocks, bullish, bearish, it doesn't matter. There's stocks that go up and go down at different parts of the year. So I hope you enjoy those seasonal trade ideas that I share with you guys because it just keeps working. That is it. I'll have another short video tonight. Be back with you tomorrow. Wish you guys all the very best. Take care. See you next time.